Oh, it's Rhonda Thomas, and we're about to do Financial Accounting's Chapter 2 coursework. So thank you for joining me. We share my screen. And I've got my Excel open as well. Once again, Chapter 2 is extremely important. It is the absolute foundation of what we're getting ready to do for the rest of the chapters. So learning your debits and credits will be very important. Okay, so just to remind you, we're going to go through this first problem together to remind us of what the normal balances are. Here is my little spreadsheet that I created. Let me show you here. Here are the rules of debits and credits. Remember, debits is the left side, credits is the right side. Assets, dividends, expenses. I forgot to put the word losses here as well. Okay, they're known as contra equities because there are going to be some contra assets that we see here soon, but I know that's kind of probably a weird term, contra. Um, there's an asset that has to exist before this account will exist. So they go hand in hand. We'll see that maybe a little bit in chapter 3. So liabilities, equities, common stock, retained earnings, those two fall under equities. They have a credit right side balance, revenues, sales, gains. Remember, the important point of knowing the normal balances of these different accounts is that's the side that causes the account to go up. That's the increase side, okay? All right, so let's take these rules and put them together. So I suggest that you go over here. So here is the cheat sheet, right? So an asset's normal balance is a debit. A liability's normal balance is a credit. Common stocks normal balance is a credit. So is retained earnings, but dividends is the odd one. Okay, dividends is an equity account, but it has a debit normal balance. Now let's go back through. Now all you got to do is follow what this says for the increase. How do you increase a liability? You credit it. How do you increase an asset? You debit it. How do you increase common stock? With a credit. How about retained earnings? It's with a credit. How about dividends? It's with a debit. How do you increase a revenue? With a credit. How do you increase an expense? With a debit. So if this is the increase side, now we need to flip it. So to make an asset decrease, you would credit it. To make a liability decrease, you debit it. To make common stock decrease, it gets a debit. Retained earnings also gets a debit. But dividends, to make dividends decrease, you credit it, right? And to decrease revenue, you debit it. To decrease an expense, you credit it. All right, so this is just a matter of memorization, saying it to yourself, practicing, and so forth. Okay, so I think we've got it. All right, we're moving on. And these next 3 are algorithm problems. Okay, so you're going to get different numbers, but you're going to get to watch me work the problem. Okay, these are called account balances. All right, well, you have to learn how to understand the different relationships of an account. Okay, so the first one is during February, $85,080 was paid to creditors on account. Okay, so we're going to put that amount in, right? How do I know it's a debit? Because if we pay down an accounts payable, then it gets a debit. Now I'm looking for, this says determine the account balance on February 1. So you have to have 3 of the pieces to find the 4th. You can't they can't give you that without 3 of the pieces. So I'm going to plug in the 3 pieces. So paying creditors caused our accounts payable to go down $85,080. We have purchases on account, which I've labeled here, should be 108,900. Okay. The ending balance was 36,580. Now I have a formula here. So what this does is it takes the beginning balance, right? If you were to go forward through this account, okay, so let me write a formula for you. So if we were going to go forward through this account, you would start with the beginning balance. So here's what it is. Beginning balance plus purchase or plus increases equals ending balance plus decreases. Okay, plus decreases. All right, so let's see if we can figure this out. Decreases. All right, so here's the beginning. Now we didn't know what that was, but we knew ending balance, right, was 36,580. We knew the creditors that we paid down is 85. So we knew the ending balance. Let me see if I can do this. And I want to isolate the beginning balance, right? Isolate the beginning balance. Here is some algebra that you said you'd never use. Okay, so I'm going to show this, right? So here is the formula for account balance. Okay, this is T account formula. There it is. So we're looking for beginning B. We're looking for beginning B. Okay, we're going to put plus the increases. The increases were 108,900 equals 36,580 plus, whoops, plus the decreases. Okay, so the decreases 85,080. Okay, so you're going to add these two together, and then you're going to bring the purchases over to the other side. So I'll just try to do this like you would see in math. I mean, in a math class. Okay, I may not do this for all of them, but I'm going to at least do it for the first one. Okay, so then to isolate, right? Let's just do the step to isolate it. Remember, beginning balance equals, so we're going to move that increase on the other side. So it's going to be 36,580 plus 85,080. Okay. Minus 108. $900. So hang on. I'm trying to make sure I have this in here right. Okay. So if you do the math there, 36,580. And I may need to change something here. Just a minute. I'll be right back to you. Okay, so then this becomes beginning balance equals, and if you do the math here, right, 36,580 plus 8580 minus 108,900, you get 12,760, which is what our answer is. Okay, so like I said, I'm doing this once just to show you the math involved. So here is the beginning balance as of February 1st. Okay, now the rest you're just going to have to trust the T account that I have here. All right, so the next one is B. It's accounts receivable on October 1st. It was 47,300. During October, 411,500 was collected from customers. You say, why is that a credit? Because when we collect it from a customer, then they don't have a receivable anymore. So we've got to get rid of that receivable. And then 54,400 was the ending balance in accounts receivable. So one more time, beginning balance. Okay, beginning balance, we knew what that was. We were trying to find the increase, trying to find the amount we billed customers. We have these two pieces. These two pieces get added together and subtracted from these two pieces. Okay, so, but we needed to isolate this one. So the answer to this is C7 is the ending balance plus the amount we collected from customers minus the beginning balance. And that is how we found this one, except we would isolate increases up here. Okay, so B is 418,600. Now we're going to use it a little more normally. Now, this is the month of April. This is the cash account. On April 1st, the cash account balance is 17,220. During April, cash receipts are 261,740, and the ending balance is 12,400. So we would add these two together and subtract this one to get the cash paid. And that's what I did. I add these two and I subtract the ending balance to find how much cash went down, right? This is the decrease in cash. This is the increase in cash. And once again, if you want to follow this formula, whichever one you're trying to find, you got to isolate it because you got to have the other three, right? So 266, 560. Moving on. Okay, moving on. Let's go to this trial balance. Okay, we have a trial balance. We need to put it into a trial balance. So we're going to, okay, we don't know cash. Okay, this is the month of August. Okay, so we're going to put this in what they call financial statement order. We're going to start with cash. The next asset is usually accounts receivable. You say, how do you know? It's practice and what you get used to knowing. This is called liquidity order. Cash is already liquid. Accounts receivable should be to us within 15 or 30 days. It just depends on our credit terms. The next one is supplies, prepaid insurance. Okay, I've got them over here, so I'm gonna have to scroll up and down. The next one is land. Okay, that is the 5 assets that we have. Sorry. Accounts payable, unearned revenue. Remember, unearned revenue is a liability. I'm sorry, unearned rent. Okay, and then our third liability is notes payable. Then we have common stock. We have retained earnings. We have dividends. Those are the 3 equity accounts. Should have a revenue now, fees earned, and the rest of these should be expenses. right? So it looks like we have wages expense. Usually that's your biggest expense. Rent expense, utilities expense, supplies expense, insurance expense, and miscellaneous is last. Okay, so now we don't know what cash is, but we do know what accounts payable is. So what I'm going to do is I'm going to roll up here and I'm going to put in the new balances because this has different balances than the last time I was in here. So accounts receivable, and I've got to make sure that I'm looking at the right account. Okay. So we're just testing this trial balance to see if it does balance. Okay, when we get to accounts payable, we need to make sure we put it on the credit side. Okay, unearned rent, notes payable, common stock, retained earnings. Got to go back across for dividends. Yep, dividends have a debit normal balance. Usually the biggest number on the whole thing is your fees earned. A lot of times that's the truth of these problems. So seems to be right. And then my wages expense, it's usually the biggest. Rent, utilities expense, supplies expense, insurance expense, miscellaneous expense. Okay. So just for just to be cautious, I'm going to go back through this one more time. Okay, actually, I'm going to go up from the bottom. Okay, I'm going to go up from the bottom. So miscellaneous expense, 17,600. Insurance expense, because it's really easy to get distracted and not be able to see something that you need to be able to see. 11,950. Yes. Supplies expense, 15,700. So when you put yours in, you might audit it really quick just to make sure that it is what it's showing. Make sure they're on the correct side. Okay, so fees earned, it was the biggest number there. Retained earnings, 29,900. 145, 850, 82,000, 18,200, 37,650, way up here at the top. Land is 172,000. Prepaid insurance is 5,650. Okay, supplies 3,750. Accounts receivable 75,300. Okay, so what we need to do is get a sum for both columns. They won't balance because there's a missing piece, right? There's a missing piece. So the missing piece is up here, and I've colored it with green, and I've already put in a formula that subtracts the larger from the smaller, right? Or the smaller from the larger. And it turns out that that cash should be 43,450. Okay. When I put it in, then it matches. Okay. When I put it in, then it matches. So I'm going to go through this now. And I've got too many fours there. Got to watch it. Okay. I don't even use an adding machine anymore because Excel does such a better job and showing me my numbers than an adding machine ever could. So it's just a matter of getting used to it. Okay. And we have to make sure to go back across for dividends, back across for fees earned. Okay. So I've keyed this a couple of times, but you know, um, it's part of what you do in accounting. So that's why I like a keyboard that has the 10 key on the right of the letters. So I'm putting in the amount that I got, and hopefully if I keyed it right, it's good. Okay, so there it is. There's a trial balance with the cash missing, and you had to put things in correctly and and subtract the bigger column, the smaller column from the bigger column, and then to find what you're missing. Okay, here we go. We're going to do a few more correcting entries now. This example is better than the ones we had in the intro problem. So the following errors took place in journalizing and posting transactions. So the first one is A. Okay, I'm going to create the error. Okay, so it says that cash of $2,520 received on account was recorded as a debit to fees earned and a credit to cash. So let's create what happened. So here's the error. Okay, that way you can see what you need to fix. Okay, so what happened? Cash supposedly went up from customers that were paying down their accounts. So it should be cash going up, accounts receivable going down. So this is completely wrong. Okay, it's completely wrong. It was using the cash count, but it went the wrong direction. Okay, so let's go ahead and completely reverse it. Completely reverse it. And I prefer doing it this way anyway, no matter if one is correct, because it's so much better to reverse it completely for the paperwork, okay, for the documentation and the paperwork. So, all right, and then finally, the right one. So let's go ahead. We have to reverse it. So the reverse is a debit to cash for the amount that we actually credited it. So to bring it back to zero. Okay, and then we got to get rid of the fees earned. So that is a complete reversal. Now we want to debit cash because it went up, and we want to make accounts receivable go down because it's customers paying us on account. So then cash goes back up again, okay, and then accounts receivables going down. So this is more like what I prefer. Okay, the next error that we have, a purchase of supplies for cash was recorded of $1,060. So they put a debit to supplies expense. Okay, $1,060. So we're recreating the error so you can see it. Okay, so what should have happened? We should have increased the supply asset account and caused cash to go down. So they didn't use cash at all. And so both of these are wrong. So we're going to reverse it. See, this way you can see the reversal of it. And now where does it go? It goes in the supplies account, which is an asset, and we actually paid cash for it. So let's put the reverse in. So that's a debit to accounts payable, okay, and a credit to supplies expense. And then the fix, the correct. Okay, so we received supplies, okay, and we paid cash for it. See how much easier it is just to reverse it completely and then put in the correcting entries. Okay, we're checking our work. Uh-oh, I put one too many twos in there. Sorry about that. That happens. Sorry about that. Okay, we're ready to go to 2A. We got 2A and 3A, and these are a little bit longer, okay? So hang in there. All right, so what we have here is a set of transactions for Signature Designs, which is an architect. This is in January. Okay, so I think this is their first month of business. And instead of using T accounts over here, we're going to use them right here. Okay, now we are not going to journalize these. We're just going to use the T accounts to get an idea of what's going to be debited, what's going to be credited. So we have cash, which is right here. It has the most entries. Accounts receivable. We have supplies, prepaid insurance, automobiles, equipment. So 1, 2, 3, 4, 5, 6. We have 6 assets. We have 2 liabilities, 1 equity, 1 revenue. See, their revenue they call professional fees. Salary expense, blueprint expense, rent, automobile, and miscellaneous expense. And then we'll do a trial balance. Okay? So let's get started. The first one is A. Now, if you want to use I've got it here in Cengage. Okay? I'm sorry, I've got it here in Excel. So the first one is issued common stock in exchange. Now we are using the same numbers together on this. Okay, so $50,000 is going up in cash, and the owner is getting $50,000 in equity. All right, so up it goes, and I'm going to go kind of fast with this. Okay, we're going down to common stock, the letter A, 50,000. Okay, so please follow along. Stop if you need to, but I am going to move along here so that I can get finished. It's nice to have a static problem that we're working together. So, all right, and I'm just going to read them from the book. That way that I don't have to scroll up and down so much. Okay, so the next one is paid January rent for office and workroom, $4,000. So here we are, and let me change it. Okay, so $4,000. We're debiting it, and that's going to be rent expense. Okay, I'm going to move this over just a little bit and make this just a hair bigger. Okay, so this was A. So I've made it just a little bit too big. Okay, this is A. We just did that. And if we were going to make a journal entry, that's what it would look like. So I did it. Okay, this next one is making cash go down by paying rent. So we always want to put our debit first. So we're going down to rent expense. And this is going to be B. Okay, and I've got $4,000. And down goes cash. That's B. Okay. We have a lot more decreases in cash than we have increases, but I think we're still going to end up with a debit balance like we're supposed to. Okay, so now, like I said, I'm going to go to reading these so we can get through this a little more quickly. All right, so then the next one is purchased used automobile for $40,000, paying $8,000 cash and giving a note payable for the remainder. So this is C. So our automobile is 40,000. We're doing a cash payment of 8,000. So that leaves 32,000 for the note payable. Okay, so 40,000 is the automobile, 8,000 is the cash, and 32,000 would be the note payable. So I recommend doing debits and then credits because you will end up with something somewhere you didn't mean to. So here we go. C, We got an automobile. We paid a down payment in cash for it, and we took out a note payable, which is the credit side, for the remainder, which is the 32,000. Okay? The next one is purchased office equipment and computer equipment on account, $13,000. So let's look. $13,000 is the equipment, and we put it on account. So equipment would get a debit and accounts payable would get a debit. So equipment is an asset. This is D. Okay, 13,000, and we did it on account. So that is accounts payable. Okay, accounts payable. We created an accounts payable when we did this. Okay, so we actually owe that now. Okay, let's check our work. Make sure all of the first 4 are in place. Okay, 1, 2, 3, 4. Okay, we'll try to check them every 4 or so. So the next one says paid cash. So here we are with E over here in the spreadsheet. Paid cash. Paid cash for supplies, $1,800. So this one is correct. I didn't have to change it. So supplies is going to go up, and this is E. $1,800, and down goes cash. For E, $1,800. Okay. The next one is paid cash for annual insurance policy. When you pay cash, and this is $3,600, cash gets credited, which sometimes you find that first. That's okay. We need a debit. It's going to go in prepaid insurance. But then when you make your journal entry, you want to be sure to put the accounts you're debiting first. So this is F. So we're going to go down here to prepaid insurance. $3,600. Okay, and we paid that in cash. F. $3,600. All right, the next one is G. G is received cash from clients for plans delivered. So we're getting cash. So up it goes, 15,000. And we get to record the revenue because we delivered the plans. So the cash is going up, and we're going to create revenue going up. That's why I put an R there. So let's go ahead. Cash is going up, and this is G. Okay, 15,000, and we need a credit. The credit is going to go in professional fees. G, 15,000. Very good. All right, let's go to H. H is paid cash for miscellaneous expenses. So we've got miscellaneous expense debit, and down goes cash. I got that here for the entry. So miscellaneous is at the bottom. So a debit of 1,500. Yep. And we paid cash. So this is H. Okay. All right. I paid cash to creditors on account. Okay, so when we pay on account, we are paying some accounts payable. Okay, accounts payable. So accounts payable is going to go down, and we are paying 5,000. So this is okay. And then cash is going to go down. So here's your debit, here's your credit. Let's debit accounts payable. Okay, this is going to be I. Okay, down it goes. We had 13,000. We paid 5,000. If we had a place to put a balance, we could. Right? We have $8,000 left to pay, but that's not what they want us to do. So, but pretty soon we're going to have a balance. So 5,000, and we paid cash. So this is I. Down goes cash. Okay, here comes J. Okay, J is paying an installment on the note payable, and it's $600. So we're going to debit the notes payable, credit cash. Okay, and so let's debit the notes payable. Notice we have 32,000 to pay off. This is just a monthly payment. Okay, so this is J, and it is 600, and down goes cash. J. Okay, let's check our work. So far you should have everything but 2 in cash. You should have a supplies. You should have 3,600 in prepaid insurance. You should have 40,000 in automobiles, 13,000 in equipment, 32,000 and a 600 in notes payable, 13,000 and a 5,000, 50,000, 15,000, a 4,000 rent, and a 1,500 miscellaneous. Okay, so we're ready to move on to K now. We're going to finish the transactions. So K says received invoice for blueprint service due in February. So we are in the month of January. When we get an invoice, that means that we need to pay for something, and the amount is $6,600. So this is blueprint expense, and we're going to put it in the accounts payable. So blueprint expense gets $6,600, and this is K. Have to be careful. And we are putting it in accounts payable because we're not going to have to pay it until February, but we want to show the expense in the month of January. So here comes accounts payable, and this is K, and it's 6,600. Okay, and then let me change it over here just to stay consistent. Okay, all right, we're ready for L now. L says recorded fees earned on plans delivered. Payment to be received in February. So really, we're sending the bills to the customers that we've done jobs for in January. So we've earned these fees in fees earned for January, but we don't expect to receive the payment for them until February. So we are going to increase accounts receivable. This is for 24,000, and professional fees is going to go up. Okay, so if we were going to make a journal entry, we record the debit first. Okay, and then so now let's put in accounts receivable for 24,000, and we record the revenue for the job we did. Okay, there's that. All right, 2 more. M. We paid salaries of assistants, $8,000. So we got a debit to salaries expense, a credit to cash. Okay, so salaries expense, and this is M. And down goes cash for 8,000. Okay. All right. And then the final one. The final one is paid gas, oil, and repairs on automobile for $350. So we are going to record an expense in the automobile expense account of $350. We paid it with cash. There we go. So let's put this in. This should be our last one. So down here to automobile expense, and this is N as in Nancy. That's the last one. So we spent $350. Okay, and I think this is our last decrease in cash. Okay, let's check our work, make sure all our numbers are put in correctly. Got all green check marks. Oop, looky there. I put the wrong one. So that is L. So, yep, I made a mistake. It happens. That's why I do love check my work. I wish I had checked my work in other parts of my life. Now we're going to come up with the balances if it is necessary. Well, we definitely need to come up with the cash balance. I'm going to save you a little time. Okay, I'm going to save you a little time. The cash balance is $32,150. Okay, $32,150. So how we got this is we took these two and added and got and so we got the sum of the debits and the sum of the credits. And when we did the math, we took the debits and subtracted the credits. We ended up with $32,150 in cash. Okay, so 32,001. I'm not going to put that in yet. Okay, so hang on a minute. All right, now we don't need balances if there's only one amount. Okay, but we do need a balance in notes payable. Okay, it's 31,400. We do need an account payable balance. That's 19,000 minus 5,000. Should be $14,000. I'm sorry, 14,006. We'll have to be careful. $14,600. Just about got that wrong. Don't need a balance there. We do need a balance here. Okay, and I think we're good. Let's just double check. And now that we've done all these entries by just putting them in the ledger, basically is what we've done, we're now going to come up with a trial balance. So we've got to put in our accounts. So go ahead and put the accounts in first. We're going to put them in financial statement order. Okay, so assets are first. Okay, and then note payable, then accounts payable. Those are our two liabilities. Then I think we have common stock and professional fees, and the rest are expenses. So all I gotta do is find the expense. They've been kind of easy on you here. So, right. And then we're gonna check our work and make sure all of our accounts are in order. And then you're gonna have to scroll up, but I'll help you with the numbers. Okay, so let's start with cash, 32,150. That goes on this side. Okay, 32,150. Accounts receivable is 24,000. Supplies is 1,800. Prepaid insurance, 3,600. Automobiles, 40,000. Equipment, 13,000. Okay, then back across. Accounts payable. So the next four are going to be credits. So the notes payable is 31,400. Accounts payable is 14,600. Common stock is 50,000. Oop. Professional fees are 39,000, and the rest are expenses that we need to be debit balances for. So we have 8,000. Blueprint expense 6,600. Rent, and see, I got too many zeros. Rent expense 4,000. Okay, automobile expense, and then 1,500. Okay, if I had to choose which side to add up first, I would. So here's what I'm going to do. Instead of just giving you the number, here's how I did it. Okay, let me put 31,400, 14,600, 50,000, and 39,000. So there's that one. Okay, let me go ahead and put the others in real quick. I think I should have started at the top. So hang on, we can fix this. This is what's cool. I'm gonna move this up one. Okay, so I left off with 13,000. Okay, and then I gotta come back over here. We want 8,000, 6,600, 4,000, 350, and 1,500. And we balance. See that? So 135,000, but it was a lot easier to add up these four first, right? And if you got that right, then it worked out. Okay, now we're going to do the net income. Well, the net income is right here. It is the 39,000 minus these expenses. So I'm going to plug that in here to my spreadsheet. That way, if anybody ever asks me if I'm doing this at a job, how I got my number, how careful was I that I figured it out? So total expenses, so net income. Net income is the excess of revenues over expenses, right? And I got 18,550. Let's give it a shot. See if we've got it. Okay, I'm going to take a break. I'm going to end this video and then I'm going to make one more video for the longer problem. Okay, I'm going to stop my share. Hang in there. We're almost done with chapter 2's coursework. Okay.